My castle is empty, so I should not pay tax.
Wrong. Ownership itself creates taxable income.
Welcome to Episode 2, The Rental Castle and Passive Income Rules, where we explore the taxation of income from house property. Let's dive into the core concepts of Head 2, House Property Kingdom. Our story begins with Princess Mira, who owns multiple castles and rents them out. This passive income forms the basis of our discussion today. The ICAI core definition states that income from the ownership and letting of house property is taxable under the head House Property. Now let's look at the deep concepts and specific conditions under which this head applies. Condition 1. The assessee must be the legal owner of the property. Condition 2. The property must be a building or land attached, known as appurtenant thereto. Condition 3. The property must not be used by the owner as business stock, which would make the income taxable under profits and gains of business or profession. Next, let's look at the crucial steps for income computation, starting with gross annual value, or GAV. Step 1 in finding the GAV is determining the expected rent, which sets a baseline for the property's annual value. The GAV is determined by comparing the expected rent with the actual rent received, and a fair rent comparison, choosing the highest value as per tax laws. Once GAV is calculated, we move to net annual value, or NAV, and applicable deductions. Step 2. Net annual value is calculated as GAV minus municipal taxes paid by the owner. Step 3. Deductions under Section 24 include a fixed rule. A 30% standard deduction on the NAV is always allowed. Another vital deduction is the interest on home loan, where the actual interest paid is allowed as a deduction under Section 24. Here's a critical concept, often tested in ICAI exams: the impact of property vacancy. The ICAI trick is that vacancy does not remove taxability. Even if Mira's castle is empty, deemed income applies. As the ICAI sensei reminds us, ownership itself creates taxable income. Your status as the owner is the key trigger. To wrap up our discussion on the house property kingdom, let's revisit the final rules. The final rule is clear. Rental income falls under house property, and only the mandated standard deductions are allowed. With the rules of the house property kingdom understood, Kabir sets his sights on the next challenge. Join us for the next episode, as the battlefield shifts to the business empire.